All right, good morning for some of us, afternoon for others. Welcome back here to Trader Minute. Great to have you aboard. We'll get started here in about 2 minutes here with our training on the basics of technical analysis. So looking forward to doing that, but going to give it just a couple minutes and we'll start. We'll start on time here in about, let's say 60 seconds. Yeah, 60 seconds now. So anyway, interesting day in the market, huh? Quite the drop, quite the reaction, and finally got a little volume, creating a little bit of pop, but that's getting sold into again. So it'll be an interesting close. Be a really interesting close. Probably pretty dangerous if it closes on a rally, and maybe not as dangerous if it closes at the lows, but we'll see. Alrighty. Well, let's get started here. Today we're going to go out and take a look at the basics of technical analysis. Now, this is the first part of 7, maybe 8, depending on how long-winded I get on a couple of them. Trainings based on or based solely on technical analysis and using technical analysis to trade. And we're going to go through today, we're going to go through the question of what is technical analysis, does it work, how technical indicators are constructed, how I use technical analysis. But as we go forward, we'll look at the different categories of indicators, choose which ones are the best for telling, various stories. We'll start to put together technical indicators onto various charts to start to piece the stories together. We'll look at entries, we'll look at risk reward, we'll look at trade exits. We'll go through, various different time frames on charting, as well as some alternative charting techniques that are out there that are really interesting and definitely worth a look. Now, if you want to access this, you can see the topics. They're over here under training schedule, and you can see that here on the live trade seat. So feel free to check that out. All right, well, let's get into today, the basics of technical analysis. And I mean basics because we're just going to start at the beginning. Not that what we're going to talk about is all that basic, because, a lot of people look at charts and go, okay, charts, all right. They think charts, technical analysis, okay, what's really happening and what's going on here? So let's go and answer the question of what is technical analysis. Let's go and answer the question of does it work? To do that, I figured, I could put a slide on here and talk about, a few bullet points or something like that, or we could do what everybody else does in the world today, and we could go out and ask Google, right? So what is technical analysis, and does it work? So let's go find some Google. Let's go find Google here, and let's see here. Here we go. Let's go. What is technical analysis, right? What is technical analysis? There we go. All right. Dictionary: financial analysis that uses patterns in the market to identify trends and make predictions. Okay. He reads up on the company fundamentals and news as a way to double check his technical analysis. Okay. Interesting. Wikipedia: in finance, technical analysis is the analysis methodology for forecasting the direction of prices through the study of past market data, primarily price and volume. Interesting word in both of these. Here it uses forecasting, and here it uses predictions. Okay. Both are talking about charts, right? Let's go Investopedia. They know everything, right? Technical analysis is the trading discipline employed to evaluate securities and identify trading opportunities by analyzing statistics gathered from trading activity, such as price movement and volume. Interesting. They don't use the word predict here. They don't use the word forecast here. What do they use? They use analyzing statistics gathered from trading activity. the reality is everywhere we go, there's going to be a little bit of definition switch, or there's no consensus definition on what exactly technical analysis is. Many think it's a predictor. Many think it's a forecaster. Many think it's a day trading tool. But technical analysis, when it really boils down to it, is statistical analysis. That's what it is, right? It is statistical analysis. We're getting into college football season, and I know, not all of you are college football fans or whatnot, but interesting thing, and I love college football. I watch it. My brothers and I, we watch it together, and we have a good old time. But when we watch college football, as the years have gone by, different companies have employed different statistics to try to do what, right? They come in and they say, well, this quarterback has thrown 11 completions out of 17 passes, and they give us statistics. And as we get more and more, or year after year, there are more and more statistics, right? And what are those statistics meant to do? Well, those statistics are meant to analyze the game. Are they meant to predict the game? Are they meant to forecast the game? Well, you will hear some analysts do that. They will use statistics to predict who's going to win. They're going to use the forecasting element of those statistics to predict who's going to win. Are they always right? No. But inevitably, every college football season, there is a game. And in the pregame, you hear the two announcers talking, sometimes three. You hear them talking, and one's like, yeah, the team that gets the best red zone efficiency and stops the other team in the red zone the most, they're going to win the game. And you go, okay, interesting statistic, interesting analysis. And then you hear the other announcer go, and it just comes out, and it hasn't registered through his brain first. And he says, you know what? I really think the team that scores the most points this game is really going to win the game. And it's hilarious when it happens, and it happens several times a year. And it's one of those things where, oh, yeah, that's the bottom line, right? And there's all this analysis that one can do on the game, on the players, on the coaching, on the past history. But is all that relevant to the game being played? The same thing happens with stocks. There's all sorts of analysis, all sorts of statistics that we can put on stocks and trading activity in the market, individual stocks, sectors, ETFs, this, that, the other. But technical analysis is really the art of analyzing those statistics and understanding what is the story that those stats are telling us. When a college football announcer gets on and says, yeah, these two teams, they have met 100 times in the past, in the past 120 years, and this team has won 80% of the time, but they haven't played in 10 years. Does that statistic really matter? Is that really relevant? What happened 50 years ago? Does that have any relevance or bearing on the game being played that Saturday? Some would say yes. Others would say no. But technical analysis is full of those types of questions. There's data. There's more data than we can ever possibly comprehend. It is so data intensive out there. Everyone has data. Everyone tries to use the data in different ways. And the art to technical analysis, and yes, I use the term art because it's much more of an art than a science. The art to technical analysis is taking and using those statistics to tell a story and put the trading odds in your favor. There's nothing 100% about it. There's nothing that says, hey, because one thing worked before, it's going to work again, right? QB can go out and he can have 4 games in a row where he has a 50% completion rate. The next game he has 80%. Next game he has 20%. It's going to vary. Game to game, all the different variables change. In the market, we can set up a technical analysis system, A, B, C, D, E, F. If all these things happen, yes, that stock's going to go up, or yes, that stock's going to go down. And we can put all that together, and we can prove that it happened the last 100 times. When those things happened the last 100 times, it did this. And you know what? That 101st time, it does something completely different. And that is because in the market, the variables, the statistics are constantly changing. The trading activity, the market is dynamic. The market's a living, breathing beast. And, what worked one day doesn't necessarily work the next day. And what works tomorrow isn't what necessarily works today. And so technical analysis is the art of analyzing the statistics and then using them to be able to make trading or investment decisions. Many people think of technical analysts as short-term traders. Some of the best technicians out there have nothing to do with minute charts or even hourly charts or even daily charts. They have everything to do with taking the statistics over a long period of time and using them to project what's going to happen over a long period of time. Little quicker reward if you're doing minute charts, right? You know pretty much really quickly whether you're right or wrong if you're using minute charts. You don't really know for quite some time if you're using monthly charts. And so technical analysis is full of all sorts of statistics, with all sorts of time frames, with all sorts of opinions. And one thing to keep in mind is any bullish technical analysis story. So bullish meaning going up. If someone's going to give an argument that this stock's going to go up based on this, this, and this from a technical standpoint, there's always a bearish argument. There is always something that can be pointed to and say, you know what? In the past, when it's done this, it's also gone down before. There are two sides to every single technical analysis coin. And I don't mean to create depression over technical analysis, right? Because that's not why we're here. But to understand what it actually is very important. I do not believe it's a predictor. I do not believe it's a forecaster. I strongly believe it's an understanding of what the price activity is and what could possibly be in the future, not what will be in the future. Now, does technical analysis work, right? Does this method of looking at statistics, does it really work, right? You can argue, does with the college football, analysts, do the stats really work? They give the commentators something to talk about, right? So in that regard, they work, but do they work in terms of really understanding the game? Well, some would say absolutely. Why? Because when they're watching, they're understanding the game better. They're understanding why certain plays are being called and why certain plays aren't being called. They're understanding certain matchups. They're understanding certain run-pass reads. There's a greater understanding from the viewer on what's going on. The same thing with technical analysis. When we apply technical analysis to a stock, it creates a greater understanding of what's going on and a greater understanding of what could probably happen going forward or what could possibly happen going forward. So we become more educated, right? We become more educated. But in trading circles, the question of does it work it always revolves around, can you make money? So let's go ask Google. Does technical analysis work? Yes, it does. It works in such a way that helps you make an informed decision rather than just buying or selling basis on tips, news, or gut feeling. Technical analysis helps you with entry and exit point. The English here is not that great. Helps you identify overbought and oversold levels and whether a stock is trading or trending mode. That's actually a pretty good definition or pretty good assessment. Does it work? Yeah, it helps you make an informed decision, right? If that's what you're looking for from technical analysis, is to make an informed decision, yeah, absolutely technical analysis works. But if you're using technical analysis as a magic 8-ball to say up or down, does technical analysis work? Does it work any better than a chimp basically pointing to an up arrow or a down arrow? Does it work any better than just throwing a dart and, hey, you know, if it lands on up, great. If it lands on down, great. In terms of predicting? Well, all you have to do is come down in here and look at all of this. There are so many arguments about whether or not technical analysis works. It's one of those things where, here, technical analysis is fundamentally flawed by Forbes, right? They make the analogy of astrology, right, where they're looking for these chart patterns, cup and handles, and head and shoulders, and flag and pennants, right? Just like we look up into the sky and we can see Taurus, the bull, right? We can see different patterns that if I say to my daughter, hey, you know what? Do you see Orion's belt up there? She's gonna look at me and go, Dad, Orion's belt? Nothing looks like a belt. There's just a bunch of lights up there, right? She's not necessarily going to see Orion's belt. And it's one of those things where, that's often used as a comparison with technical analysis. Bottom line, does it work? Well, I've used it for many, many years, and I believe that, yes, it does, as long as I'm using it to make an informed decision. If I'm using it as a magic 8-ball, then no, it just absolutely doesn't work. If I'm using it to say, well, this is my favorite part. People get into technical analysis, and then they expect to be able to do this. They expect to be able to take a chart, any chart at any time, and they expect that with their technical analysis skills, that they can look at Disney and say, you know what? Yeah, Disney's going to go up. Or, yeah, Disney's going to go down. And then they go, okay, Disney's going to go up. All right. Then they come and they bring up another chart, and they bring up UPS, and they say, you know what? Yeah, this chart's going to go up, or this chart's going to go down. And they think that they could just go through chart after chart after chart and say up, down, up, down, up, down. Well, eventually they're going to be right? UPS is going to go up at some later date. It's also going to go down at some later date. So when we use technical analysis to be predictors, we can always be right, we can always be wrong. What's the time frame? So time frame matters. But if we're going to use technical analysis to sit there and bring up chart after chart after chart and go, is this stock going to go up? Is this stock going to go down? We're going to be sorely disappointed. If we use technical analysis to recognize patterns, trends, and probabilities, now we can make informed decisions. Now we can say, you know what? Chances are that it does go higher from here. Chances are pretty good. When we see this pattern, it tends to work this percentage of the time. I mean, we can get that specific. When we see this activity, especially on a day where the market's down and it's outperforming, generally it tends to perform pretty well in the subsequent days. But we can take our UPS chart and do all of our analysis and say, you know what? Generally, it's going to go higher after today's type of action. But if we wake up tomorrow morning and the market's down 3% because of some computer error in India, is the chart on UPS going to care? No. What's going to happen? UPS is going to go down. We can do all of our analysis. We can have everything where the odds are in our favor, but there are so many variables out there that anything can and does happen. So if we're looking at technical analysis to say up, down, down, up, down, 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 we're going to be sorely disappointed. If we're using it to make informed decisions and understanding our risk, now we can use it effectively. Now we can put some elements in to give us some consistency, to give us something to kind of hold on to give us something to where we're not just blindly guessing. And to me, that's what technical analysis is about. It's about what's the story, what are the odds, and okay, given that story, given the odds, do I want to go now make this trade? So does it really work? Well, to each their own. For me, I would never trade without it. I would never trade without it. But I also don't believe it's the whole story. I don't believe that, you can just have technical analysis and that's it, and understand really everything or what you need to know to be successful trading. Now, where do you use technical analysis, right? Well, you could create your own indicator, right? You could create your own indicator. Right now we just have what are called candlestick charts up here. And in and of itself, it's a technical indicator, right? It's showing statistics on the market. It's showing on a day-to-day basis what the open, the close, and the high and the low were. So we can tell that data from it on certain dates. So it's a technical indicator, right? That's what this chart is. It's a technical indicator. We can do something as simple as staring at CNBC all day, and we have a list of 10 stocks in front of us, and every time that stock is mentioned, we put a slash. And we tally how many times each stock is mentioned each and every day. That's statistics. Those are numbers. Can we go make something out of that? Right? That's technical analysis. You don't need a fancy chart to have technical analysis. Technical analysis is just some sort of statistic, right? But what we have to be able to do as technicians is filter out what statistics are meaningless and what statistics matter. For example, here's UPS. I'm going to bring up a monthly chart, right? And here back in 2001, see this drop right here? And then this pop, and the price action went to a new high, and then the stock went up afterwards. Does that have any bearing or any relation on what's going on today? Some would say yes, some would say no. For each technician, it's their job to discern that, to decide, hey, what pieces do I want, or what pieces am I going to use that matter to me, and what pieces am I going to take and say, you know what, it's just TMI, too much information. It's just more than I need. It's starting to get overly complex. And when I get overly complex, all I have is a bull and bearish argument for every single stock, and so I have nothing to get into ever, right? So technical analysis is about, understanding the statistics and choosing which ones you want to use, which ones you are going to, take into consideration when you are making trading decisions. One of the most simple technical indicators out there is a moving average. So I can come down here and I can overlay a moving average here onto my chart, and each chart system is a little bit different, but I can put a 50-day moving average. Well, what is this? Well, it's this funny blue line going here, right? And you'll have some traders that'll say, well, when it gets to the 50, you buy. When it gets up, you sell, and you do this at the 50, and you do that at the 50. And look, we can look at UPS. It does different things at the 50 every time. What's the 50-day moving average? Well, all it does is take the closing price over the last 50 days, average it out, and mark what it is. So essentially it smooths out the price action. It's a lot less choppy than the actual candles in here, right? So it's a trend smoothing mechanism. Are we going to use that to say, well, this stock's at the 50-day moving average, so I have to buy or sell? That might be a stretch given past history. That might be a stretch given the fact that all we're saying is I'm going to buy when the stock is at the average of its price over the last 50 days. Well, if it's at the average, doesn't it go below that price, and doesn't it go above that price? It doesn't make a lot of sense, does it? Right? And with each technical indicator, that's what we're going to have the decision to make. Does this make any sense? Is this relevant? Does it matter? Right? And as soon as we go and say, the 50-day moving average matters, well, now we have to ask ourselves, well, what about the 49-day moving average? This one's a little different, right? Hey, the price right here didn't get to the 50, but it got to the 49, so now do we buy at the 49? Right? You could quickly see how ludicrous and how overly complex technical analysis can become. And that is, to me, the big danger of it. And so for technicians, for those looking to use technical analysis in their trading, the first thing that they have to remember is keep it simple. Every time you get a buy signal or sell signal or something like that based on technical analysis, there's somebody else that's getting the opposite signal based on something completely different. There always is. There isn't a mass consensus where every trading algorithm around the world and every trader sitting at their desktop looking at a chart gets a buy signal all at the same time or a sell signal all at the same time. You have to find what works for you, what fits into your comfort zone, what fits into your risk zone there. But the bottom line is it comes down to what's the story. And as we go forward through these classes, we will answer the question of the story. We will start to dig into these indicators. We will put them together and make them usable, okay? But every time we do that, we're going to be telling the story of what's happening with the stock. Not, well, this is going to go up tomorrow or this is going to go down tomorrow, right? We're going to tell the story of the stock. We're going to look at the risk. We're going to look at the reward potential, the patterns that have historically happened after certain price action. And when we have that, we can now make an informed decision. Every one of us during our lifetime, we go out and we go and buy a car, right? Whether it's a used car, whether it is a new car, whatever it might be. And I'm at a Dodge here in Salt Lake. Okay, great. And we can come into this, and what do we look for? Well, some people are looking for gas mileage. Other people are looking for reliability. Other people are worried about cost. Other people are worried about maintenance. How much is it going to cost to maintain? How often is it going to be broken down? How often do I have to take it to the shop? Other people are going to come in. They're looking for comfort and style. They want some bling. They want something that looks good. They want something that they can be proud of or impress their friends with. So I can't come to this page that has 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 cars and say, this right here is the right car. This is the car. I can come in and I can say, well, you know what? Based on this, and this is the one that I'm comfortable with. This is the one that I like. But I can't come in here and say, well, this is the absolute car. Because you know what? This could be a perfectly good car right here. And based on the information that I have right here, this Jeep Cherokee could actually be a lemon. I can't understand every statistic here. I can't tell whether there is there's corrosion under the gasket or something. I don't know much about cars, but something with the spark plug or, with a filter or something like that, right? I can't tell all that. There might be some sort of microscopic flaw that causes it to, catch on fire as I drive it off the lot. Probable? No. Possible? Yes. Right? And so what do? As humans, we come in and we say, hey, this is what we're looking for gas-wise, style-wise, cost-wise, maintenance. I'm looking at all these. What generally fits everything that I'm kind of looking for? And we make the best decision we can with the information that we have. Trading using technical analysis is no different. It's the same thing. We go out and we take the information that we have and we make the best decision for us. For example, yesterday, I went out and analyzed Chipotle Mexican Grill. I got on video and I said, this is my favorite stock for the challenge to get into. And I said, you know what? I'm going to be a little picky with it. I'd like for this thing to pull back into about the 490 to 492 level, either yesterday into the close or this morning. That would be my comfort zone from a risk-reward standpoint. Today, the stock's up almost 6%. Did I do something wrong? Well, if technical analysis to me is, yes, this stock's going up tomorrow, or no, this stock's going down tomorrow, then absolutely I did something wrong. If technical analysis is about finding the story and the comfort zone for what I want, then no, I didn't do anything wrong. For me, technical analysis, yes, I wish I were in yesterday. I wish I were running with this. It feels so good right now, right? But I also know that that's, if it had gotten downgraded instead of upgraded, it could be down 20 bucks here today as well. That those are possible. And so I have to look and I say, okay, going forward, do I take any lesson out of this? Well, no, because it did something that I knew was possible. It had a nice setup. Okay, chances are it goes higher. Okay, this one went fast, right? And so am I going to be as picky the next time? Maybe not, but maybe, right? And the overall element is being consistent, sticking with what you're comfortable with, and in a risk-reward element that you're comfortable with. And let's face it, in the market, that's very difficult. Very difficult, because the second your neighbor hits on a trade out of pure luck, you know what they're going to do? They're going to knock on your door and say, ha ha, look what I did. I got this and I got that. And you go, oh man, I didn't have much opportunity right here for doing what I like to do, right? And so you're, oh man, do I chase this? Man, do I jump in? Jim Cramer on CNBC said Disney's going to 123 after earnings. Do I buy it? There's the chaser. There's just the, man, I want to know where this stock's going tomorrow, the next day, and I gotta get in before it gets there, rather than sitting back and saying, look, this is where I'm comfortable getting in. This is my risk reward. This is what I'm willing to trade. And if I'm wrong, so be it. It happens. If I'm right, so be it. It happens. But I'm going to stick with what I do and my strategy. And if you can do that with technical analysis, you will be highly successful with technical analysis. And technical analysis will work. If you're about looking at a chart and saying, well, this stock's going up today or this stock's going down today, you're going to be sorely disappointed. Because what you're going to do is you're going to go look at one indicator, and then it'll work once, and then you'll use it again, and then it won't work a couple times, and then you're going to go to another indicator. Then you're going to go to another indicator, and you go indicator hopping, right? And then you're going to learn that there are hundreds of indicators. And you're going to go, wow, okay, I can use this one, and this one's going to work, and then it's not going to work. And then you're going to go hop to another indicator. Sound familiar? Then, you learn there were 100 indicators. Now you start to learn there are thousands of indicators. Oh, now you start to learn that you can take one of those indicators and change up all the parameters to make it a completely different indicator. And that there's actually infinite number of indicators out there. Actually infinite number of statistics out there. And you're going to chase and chase and chase looking for that holy grail predictor, that magic 8-ball indicator. Well, that's not what technical analysis is. Technical analysis is about using statistics to tell the story and to put the odds in your favor. And if we do that, we can have success. And as we go forward over the next 7-8 classes, we are going to do that. We are going to take technical indicators. We're going to simplify them. We're going to put together what the story is on them. And we're going to put together different templates that say, hey, you know what? The odds are in our favor here, or the odds aren't in our favor right here. Thanks for hopping on. Any questions, please let us know. Have yourselves a great one, and we'll talk to you later. Take care.